All right, another quick video here before my little buddy gets up and it's time for Grampy to get busy for the day. I think we'll do some fishing today. Hopefully he doesn't catch another bullhead. You guys ever taken a bullhead off a fishing line? It's not a lot of fun, especially if you don't have a chainmail glove. Those things will cut you to ribbons. But anyway, uh, I digress. This is crude oil for Friday on the footprint chart and the delta profile and the filtering of the footprint chart. And keep in mind that all these lines that you see on this chart were put on there before trading even started. So this green line right here, we knew there was a boatload of longs that got long there. A lot of shorts that got short up here on a shorter term level. A lot of shorts here, shorter term level, a lot of longs here, and also a lot of longs here. So we knew ahead of time where these guys would defend their positions. So as you can see, these points of interest were all instrumental throughout the course of the day. We had this run up, we broke out through here, but if you notice, we had a long up bar and then a long down bar, and then an up bar, and then a long down bar. That, my friends, is telling you right there that things have changed dramatically. When I say things have changed dramatically, you can see what I'm talking about. You had a lot of indecision up in here, right? So and once again, you came back up to where all those shorts were. They defended it, brought it all the way back down to where all those longs got their positions on. Came all the way back up to where all the shorts got their positions on on short, sorry. And then we're able to come down, test that where all those shorts were, and rally back up. Then come back down, test it again, rally back up, lower high, right? And that is the rest of the day right there. So you can see that by determining where large pockets of institutional longs and shorts have been put in place, you can get a determining factor as to what could potentially transpire at that specific spot. And as usual, the 33, which is this blue right here, was instrumental on the day as well. And as you can see, we came up almost touched about 3 ticks from touching this zone. When you get zones that have both green and red in them, that is basically, and I know I touched upon this earlier, that is the institutional fair market value. That is the institutional value area. Not the value area off a profile or not the value area of some technical indicator, but a true value area measured in real time based upon what the big boys have been doing. So you can see this right now, right in this area between 74 and 70 is going to be instrumental for crude oil on the downside and on the upside. So in order to get this thing running back to new highs, you got to take this out because this is where the big boys saw value. They found it fairly priced right there. So that will be the determining factor as to the next. I call them lines in the sand because that's really what they are. Um, they're lines in the sand that need to be either defended or violated in order to determine a specific trend in a certain direction. They also dictate the strength or weakness of who's in control and how strongly or how weakly they're in control. If you have a situation where they're not very strongly in control, either on the long side or the short side, then you're going to get more volatility. because as you shift from one side to the other, volatility is a byproduct of that. If you have an environment where either one side or the other side is strongly in control, and you can tell that by looking at the footprint, then volatility decreases, but you get a trending market for an extended period of time. And as you can see, we just kind of chopped around. I mean, yeah, our low down there was about 43.20, and we got up to, what did we get up to? Got up to about 60. So when I say a trending market, I'm talking about $1.50, $2 in one direction or another. So that's one of the things that the footprint affords you the ability to do. So, I mean, when the markets open back up Monday night, you can be looking for, let's see, we got a boatload of shorts right there, right? And we have a boatload of longs right here. So those two levels right there are going to be paramount when this market opens back up. So let's see, let's do this. Let's hide that. Let's hide this. Let's hide this. I'll hide this. And we'll keep it open so you can see exactly where the two major lines in the sand are going to be come the open. It's going to be 55 and it's going to be 28. Those two areas are going to be, I thought I sent this to the back. Those two areas are going to be, I mean, you got some shorts here and you got some longs here also. But these two levels are going to be the major lines in the sand. If the bulls cannot get back above where all these shorts were put on, then we're going to move lower. If the bears cannot keep it below 55, then we're going to go higher. So those are your two lines in the sand for when crude oil opens again on Monday night. So anyway, you know what? Well, let me bring up the Bund here. If you remember, on the Bund, this green, this blue, and this green was the institutional value area that we had determined. And as you can see, once again, it was instrumental throughout the course of Friday, right? I mean, I'm telling you, man, you got to use this stuff. You're putting yourself at a disadvantage to everybody else who's trading this stuff that uses the proper tools. If you're not, you can't just be using a 2-minute bar chart or a 3-minute bar chart or a point and figure or a MACD or stochastics or any of that stuff. I'm telling you, you will get gobbled up. You might do well for a while, but you will eventually get crushed and you will blow your account up. Everybody does it. So if that ends up happening to you, don't feel bad. Realize that it happens to everybody in the beginning. I blew up 3 accounts. I mean, I did that a long, long time ago because I learned my lesson every time I blew it up. But if you think you're going to get into this game and not blow up an account, then you're going to be sorely disappointed, because I've never met anybody who still continues to do this in a practicing fashion that has not blown up numerous accounts. That's just the nature of the beast, and it's a learning process. The other thing I wanted to touch on here real quickly is that there's a lot of red light, green light systems out there. In other words, automated, right? Buy here, sell here, blah, blah, blah. And I get a lot of emails about how discretionary this stuff is that I show. Well, I mean, this stuff is discretionary. Yes. Well, trading is discretionary. As new information becomes available, you have to be able to make decisions based upon that new information. So as far as automated red light, green lights, they will blow up eventually. I'm telling you that right now. And, I'm not trying to rain on anybody's parade. I'm just trying to be realistic about all of this. Trading is discretionary, and you have to learn how to read the market in order to use that discretion in a manner that's going to make you money. So I'm not discouraging anybody. It is a worthy effort, trust me. But don't think that you're going to have some giant shortcut with a red light, green light system that's going to tell you when to buy and tell you when to sell, because it doesn't work that way. Like anything else, it might work that way for a while for you, but eventually it'll blow up. So take that to heart, please, because I don't want to see you guys lose your hard-earned money. All right. That being said, this video went over my normal allotment. I'm already at 11 minutes and change here, so I will talk to you guys later.